The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 25th day of April. My pleasure to be here. Dow's down 130. Very interesting. At 23. Let me just show you this here. I'm going to make it a little bit darker for myself. Within the context of the markets, this H pattern, remember we've spoken about this very potent pattern that becomes a lowercase h that can go to a lowercase m. All-time high in the Dow, 26,616 on the 26th of January. Chapman wave 2-bar reversal, peak D, tumbles down to 23,360, rallies back to 25,800, makes the arch formation, has a slightly lower low at the 23,344 level. The S&P, the QQQs, most of the indices did not do that. The Dow did. Has a rally, and I say this one should be an arch formation. I thought there was a chance it could go higher than 24,858. It hasn't. And right now it's trading at 23,891, down 133. And this is yet another H pattern right here. And the MACD is just about to cross negative. It has just crossed negative, but the day is young, so we can't say it for sure. And the stochastic's way down 56%. On balance, volume is extremely oversold, and that's suggesting there could be a little bounce at any point in the next couple of days. Lowercase h pattern in the weekly chart going to a lowercase m. And here's the 120-minute chart. The weekly made the peak E. The 120-minute chart in this last rally to the 17th, about the 17th of April, made a peak E and is pulling back very sharply. Now, I'm going to go to the E-mini just for a moment because I wanted to show, because it trades pretty much all day, all night, except for the weekend. Touching the 200-period moving average. Yesterday it hit it, tried to rally this morning, went under it, now it's slightly above it, and that is at 26.20. And we are trading at 26.22, down 12. The MACD hasn't crossed negative yet. It's about to. In the daily, we'll see what happens by the end of the day. Stochastic's very negative. The MACD hasn't gone as low as the Dow, but it's very low. There's the H to M pattern in the weekly at a peak D. And here is the 120-minute chart that had a failure pattern yesterday. Did rally as we anticipated. And then at 26.8850, just reversed sharply down. Went to 26.16s, and I said to subscribers to my opening call that if it breaks under 26.19, then the level to watch will be 26.06, 26.08 to 26.06. What was the low today so far? 26.11. Yeah, got to watch that real closely. There's the lowercase h, went under it, closed under it, tried to rally above it, and it's now slightly above the 26.16 level at 26.21. I said it's above, but not that great. MACD is really struggling to turn up. Stochastic's very weak at 10%. Now let's get out of this, and I want to do a bunch of things before we go to our first break, because there's a lot to do today. The cash S&P right at this moment is trading down 12 at 26.22, and there again at least at 26.07 is really important. That is a 200-period exponential moving average. So we're going to watch this closely. The IWM, and this is going to be fascinating because the IWM has pulled back. It's within a trading band. It's not as ugly looking as many of the other indices, but it hasn't been able to break upside. Let me just show you this if I'm able to do that in a short period of time. Yeah. See this 120-minute chart? See this beautiful arch formation? See this beautiful cup formation? See the left side, right side price time match? Well, this particular move down has already gone to a leg F, could be a trough F, but a leg F to the downside in this move. Look how long and big the moves to the upside were on the way up, even on the last move down. This is chop, 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 slightly lower lows, slightly lower highs, and then all of a sudden it breaks down under the 200-period moving average. And that's saying to me, you got to be careful of one sudden big slide to the downside. If at 155, 53, 54, down 89, there is a break of the 152.90 support, you could see a real sharp move to the downside. So any rally now has to go above the 9-period moving average of 154.60. Needs to get above that, and that'll really help. The QQQs, I keep looking at this, shaking my head. The QQQs, which made that peak D top at 175.21 on the 13th of March, has pulled back pretty sharply again today, but it's actually now inside the wick of yesterday's low at 158.01, down 45 cents. There is so much evidence to suggest that we will not make that 175.21 all-time high anytime soon, that there's going to be a lot more consolidation, even if it's a rotational consolidation going on. And at some point, if we break 153 support, it's going to go down pretty sharply after that to test the low that was made the 9th of February at 150.13. Meantime, at any point, especially with the SMHs, semiconductor chips, really getting pretty oversold, ready for a bounce at any point. I'm just saying that yes, we could have reflex rallies, but my suggestion is to be thinking in the intermediate term, lower highs and lower lows. Just keep it as simple as possible. Sell mode in the daily, sell mode in the weekly of these major indices. Now, this is going to be very interesting. If you look at gold, gold is down about 11. It's about 10.5 right now at 1322. I discussed this the other day and said something's wrong with this picture. Gold is rallied somewhat. Silver wasn't following, but some of the gold stocks had done really well. Silver and gold stocks had done pretty darn well. And that, unless I was mistaken, the rally that we saw in silver the other day that skyrocketed to that leg D in the 1720s, I said without gold following and with a real mixed picture in many of the stocks, there's a chance that we could be looking at short covering. And the only way I could assess that is that there was such a divergence with silver suddenly spiraling by itself. It really didn't have gold going with it, that there was an aberration. And aberrations usually revert to the mean after that. And my suggestion is that watch silver closely. That was a false breakout to the upside above the 200-period moving average and the rectangle resistance at 17. It went higher. Now it's way down at 16.52. That's the true silver, and I don't think silver is going to move and gold is going to move much to the upside, rather settling with slightly lower lows and lower highs, trading band at this point, and I'll tell you why. Look at this move here in the dollar. The dollar's trading at 91.19. Not only is it a leg D in a Chapman wave cup formation that has gone from the left side to the right side in a price time match. Today, was that today? Yes, today is the day. No, yesterday was the day to test 90.93, and it did that. Today is a higher high. MACD is very strong. Stochastics at 85%, very strong. This is good action, and I'll talk about it as soon as we get back, because this could be together with yields what's on the market. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So we're back. I just wanted to show this here. This is the 2-minute E-mini. You see this beautiful chart formation goes to an instant restart, peak D, and then it goes to another peak D at about 26.33. And then what happens is it turns down. And there was a left side, right side price time matched in the arch formation. And this trend line is going to be absolutely imperative to maintain right here. See this line right here? Let me make it nice and thick. Let me see if I can see it. Yep, there it is. Just like to check sometimes. And Tiger TV. This has to be pink. There. So this is going to be very important in terms of support. And right now, I could even do this. I could make a channel to show you that there it is. Time alone will move you out of the channel. Remember, channels move in price and time. Sometimes the consolidation just takes you from one end of the low of the dashed line to the upper end of the dashed line. And that could be sideways, in fact. So watching this closely, but I can just tell you the 200-period moving average at 26.26 makes this 26.24's area very important. A close above 26.28, that's 3.5 points from here, would suggest that there's going to be another rally attempt, and that's going to be the key one for the day. As I said to subscribers, I'm opening a call. It's the period between 11:10 and 1:10 today. That's going to be absolutely important. If the Dow gets back to just a minus 40s, that's not bad action, but it really has to get to about a plus 20 to a plus 40 by mid-afternoon to say, hey, this particular phase of the Dow move is done, and now we're going to have a counter-trend rally. Two things to watch for is the volatility index at 19.11 is up $1. Whoa, it's up over $1. So that's going to be important. If the VIX starts to decline later on to under 18.45, I'd say, okay, then you can have some late rally. So this is going to be very important. Let me just get back to the charts we were looking at, if I can find right there. So we're looking at the dollar. So this dollar position is with a peak A to a B, then it restarts and it goes A, B, C. Underneath that 90.93 high, pulls back. We've been long since the 6th of April, continue to be long the dollar via the UUP, not a great instrument, it's the best you got. This is leg D. we've done the left side, right side price time action. If it closes nicely above 90.93, hey, in technical terms, if you go to your technical book and you look up nicely, I'm not sure you're going to find nicely articulated very well. However, there are moments where nicely really infers to something that is a little bit beyond expectation. So 90.93, 91.808 would be pretty good. 91.19 is really much better than good. So yeah, that's pretty nice. So we're looking at this, and the MACD is at 85%. And I'm suggesting to you that yields and the dollar are game changers. And I spoke about this for about a month, and I've been saying there's a possibility that within the context of looking at sector rotation, it is the aberration, it is the thing you're least expecting that actually turns the market or a sector on its head. So here we are with the dollar not even breaking out. It's looking good. It's starting to look like a breakout. I have to wait for Friday. A breakout to me would be really strongly above 90.93, the high of leg A in the weekly chart, the 2nd of March. That's the high that we were looking at peak D before. And I want to see it up in the night. It really must. 91.19 right now? Nah. It really needs to be at about 91, above 91.25. And then I'm going to say that is a very nice breakout. Why? Because we are firmly into the ugly candle of the week of the 12th of January. High of 92.64, low of 90.90. That's what I want to see. And the stochastic at 49% in the week is improving, but it's not great. And the MACD is really improving a lot. The monthly chart, the reason why I'm so involved in looking at the dollar as a potential for a currency move of time and price is because the weekly chart has made a soft W formation under 20%, cross positive in the stochastic, but not above 20%. That's what the two characteristics we look for. One is to cross positive, and the other is to, with price movement, to see the stochastic go close above 20% on that bar. That would be a monthly candle. And you want to see the price move to a previous peak or above a 9-period moving average or something important. In this case, 92.01 is the 9-period monthly moving average of consequence. It gets there, and that 92.84 200-period moving average in the weekly chart, that orange line there, that moving average becomes a target if we can just touch 92.01, and that's 92.84. A lot to expect. This is just the first of a series of nice actions in the dollar. Look at the euro, how it's pulled back. EUR USD, it's about to test the low on the left side, and that's that arch formation low. 1.215 is at it's at 1.217 right now. Huge move breakdown in the arch formation of the daily. And look at this. I haven't looked at it today, but I'm anticipating. Look at this. Yep, there it is. The yen. Remember yesterday I said if the yen can get towards the upper part of this candle, then that 200-period moving average is going to become a magnet at 109.56. And here it is at 109.32. Fabulous leg D, very strong leg D. This kind of candle invariably consolidates with either a rectangle formation, something like this. I'm going to draw it in, or it's a flag going to an apex. In other words, a V-shaped sideways triangle formation. So far, this is very good action. And look at the single leg A up in the weekly chart. Ooh, I wish it was a leg B and not a leg A. But the MACD and stochastic are confirming that monthly chart needs a lot of work. It needs to get to 111 before the monthly really starts to improve a lot. So here we are. We're going to look at crude oil. CL, crude oil right now is down. Oh, down a penny. It just made a peak C1, C2, double top. I think there's still just a little bit of strength left to be able to retest the high that was made at 69.55. Yesterday's high was 69.38, says peak C1, C2, or a G/C going to a D. So far, I don't see anything to think of shorting crude oil. I think there's a little bit more on the upside, then we're going to have to reassess. Now we're going to get to this. Look at this, the yields. You tell me, does this look bullish or bearish right now? These yields, the 30-year white one, the TYX at 32.09 high today, trading at 32.09 right now. The 10-year is the TNX, the brown one, leg E. Now, it could have started a brand new A. I'm calling it E for now. And this, in the weekly chart of the 5-year, the cyan FVX, 5-year T-note yield, was leading the pack and has broken out. 32.22, just a mere 20, what is it, 22.22? Just a mere 13 pennies, or ticks, 13 ticks, breaks out to a leg D finally in the weekly chart. That's what we've been talking about for a very long time. I think I've covered a chunk of stuff. We'll be back and take some of your questions. Well, a lot of questions. I'll be right back. Dow's down. Not to you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Looking at here, this conglomeration, let me show you something really fascinating. The last time there was a conglomeration like this was right here. That was April of 2005. See that little clump together? And that wasn't at recovery highs. That was just at that was a move that started from about October, November of the previous year. But yeah, look at this. If I can get there, there we go. Right here is where the whole thing started. Look at that. See that right there? back in April of 2000, and I don't know if I can go back that far. Yeah, I've got it written up. I'm going back, there it is. So back in June of 2007, there was this cluster formation that, in a way, looks a little bit like what we're looking at, except for one thing. In that case, the 30-year was actually leading. Now look what's happening. What we're looking at is the 30-year is leading only because of the numbers. It is at 3.2%. What I mean by leading is that the 30-year is the one that's really been activating the entire move. The 10-year has been following, and the 5-year, the white one, TYX, has been the laggard. And it's within like a hair's breadth of going to that missing leg D. The big question for me is if next week, this week we make a leg D, if this is a D in the weekly chart of the in the Chapman wave methodology of the 30-year, an E in the 10-year, and an F in the 5-year, that would mean there's a real good chance that bonds, the TLT, let's go to the TLT right now, could actually start to rally next week and have a pretty good few weeks of rallying. But what's really important is if it does start to rally and it takes over, it's not, I call it normal. It's normal, but only within a certain number of days or weeks, or not always months, but just in the shorter term. If money starts to come out of bonds and go into stocks, that means that the TLT, at this particular point, you're seeing the yields start to rally. And what will happen is if money goes from stocks into yields, that's when you'll see the TLT start to move. I made that complicated. Let's just make it real simple. The TLT is at 117.27. If it takes out the low that was made the week of the 23rd of February, 116.51, and holds below that for 2 weeks, that's very negative. That's much higher yields. If, in fact, it just goes close or goes, remember, this is the arch formation. If it goes toward exactly on or just under that left side low, let me just type in the price, 116.51, because I'll be talking about it a lot, 116.51, and then closes above it, there's a chance that it could have a pretty decent rally. That would be a negative for the market, in my opinion, but a positive for the yields coming down, positive for the TLT, and that would make the TBT, which is trading right now in the daily leg B, I still think it's probably going to make a C and a D. In a B right now, let me just open this up so we can talk apples to apples. So there's the left side, 39.86. So it's a 39.06, not just a point away from really breaking out. I'm watching that, and there's a chance that we will make, in the next couple of days, we will make the leg D in the weekly chart of the TBT above that high of 39.66. And then we might start to see yields start to say, oh, okay, it's enough rallying, we're going to have a bit of a rest, and the TLT starts to bounce. Those are the scenarios we're looking at. All I can say is if the TBT continues to push into the 40 area, yields are just going to keep, yields are going to scream even higher. So now let's go back. You remember I was looking at that very short-term 2-minute chart. So this 2-minute chart now is in leg C. That was a nice turnaround. The stochastic went above 20%. It's now at 91%. The MACD's rally. I wouldn't be surprised if we've seen at least some kind of a low for the day, at least for this particular period. What happens if it gets to 26.36? We're at 26.31 right now. Something else is going to happen. Is that where it reverses? What happens? Right now, it's stopped at the 200-period moving average of the 5-minute chart right here. And the 10-minute chart is improving, but it's not great. Any pullback that reverses from here under 26.24, that's going to be very negative. So let's get back to our story. Now we've got a bunch of questions. First question, 3 people in different ways asked about, so let's do this. Boeing. Boeing had a fantastic, I mean, when I say fantastic earnings report, let's put it this way. I haven't looked at it in great detail. I just kind of saw that it was a very positive report. I'm looking at the chart, and the futures last night were up about 8, and then they were up about 6, and then they were up about 12, and then they were up. So they've been all over the place. And this morning, Boeing opens at 338 and goes to 344.02. That is a huge move, because yesterday's high was 348, was it? 347.67, and it closes at 329. 323 was the low. That was a huge leg F. This is a peak F. There's no new high today in the daily chart. MACD is still good. Stochastic's pulling back sharply. On-balance volume is improving a little bit. So this says to me that at 337 right now, I have not changed a whit my view that the Boeing, realize that Boeing's earnings, if I heard correctly, they are making every day what some countries wish they could have as gross national product. I mean, it's just incredible figures. But what I'm really looking at is, I think all the good news is out. And I wouldn't be surprised if Boeing doesn't have to break down. But I think it's going to be touching 302, the 9-period exponential moving average in the monthly chart. That's what I'm looking at. MACD is a weekly chart is not good. Stochastic's flat at 40%. That's not good. The daily chart is in a retracement failure mode right now. But if it breaks about 345, I just have to say, you know what? Internal strength is still there in Boeing, more than I anticipated. But I think we're going to break under 332 in the next few days, and that's going to be the clue. Close under 332 says, you know what? All the good news, it might not be able to match the good news of this year, of this quarter, and that might be an issue. So that's what I'm looking at. Boeing, very important. I mean, you can go GD is General Dynamics, gaps down huge today, down 8 at 214, made a peak E weekly, and a leg E is a peak E in the, peak F in the monthly. That's interesting. F/B. I'm going to give it the alternate count just for now, because the technicals in the monthly are still okay. So General Dynamics trading at 214, down 7.78. Look at Raytheon. Raytheon, of course, was one of the best. It's still holding better than the others. It's down 4.50, having made a peak D right there. Oops, no. The peak E in the daily chart. I have to tell you, these Ds and Es, I had that webinar on a peak D. This is something to take note of. I'm looking at this and I'm suggesting that there's a consolidation taking place in the PPA, and that is the ETF for the defense and aerospace area.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, so we're looking at Raytheon, as I said, peak E in the daily chart of the, this is the daily chart, leg F in the weekly chart, and leg E in the monthly. Now, this is going to be very interesting because it's telling us that there's a chance that it might not be peace, but it could be the notion of peace for the next, could be a couple of months, actually, maybe even 3 months going into the summer. And that's very interesting. So a couple of things that I wanted to talk about is within the context of the aerospace and the defense. Boeing is really aerospace. I don't know much about what they do in terms of defense. I'm sure there's a defense part of it, but mostly I think it's the travelers that are on. It's not. This is not. This is just for passenger use. I don't think it's for defense at this point. And just it's an incredible company. And there are a couple of things that are going on here. I thought someone asked if I'd look at it a little closer. Yeah, the MACD hasn't crossed negative yet. The stochastic is still not bad. It's at 73%, not bad. On balance, volume's quite weak. But what I am looking at is that the arch formation that was formed in the daily is representative at a peak A, sometimes a B, but certainly if it's a peak A, in the weekly chart that says this really clearly that there could be an arch formation if at any point in May, I'm going all the way to May, I'm not talking about April, I'm talking about May. If in May there are trades that are already below the 330 to 327 area, because that would really indicate that the MACD gets even weaker and the stochastic at 40% goes even low. I'm suspecting that we won't see a low until Boeing gets to about the 30 to 25%. I'm not sure this is the move that takes it to the single digits in the weekly chart, but I wouldn't be surprised if it gets to about the 32% area. And the stochastic and the MACD and the daily are still very strong. So it's very interesting that the weekly chart is WEAK, weak. So let's get on with our, let's see. Okay, so yeah. So Paul says, you still don't understand the effect of margin debt and interest rates. It's going to take the market down. You're behind the times. Well, I don't think I'm behind the times. I've focused on margin debt. I don't think margin debt in the really big picture for the major top of the coda, that's the end of this whole thing that I call the coda, I don't think we're there yet. I do think that we're under tremendous pressure, and I think it's going to be a debt that's that you can measure by autos in that area. I'm also looking at this whole thing with housing. Look at the housing index here, dollar HGX. This is the candle today is not a bad candle. There was a downtrend and it hit the downtrend, trading at 306.28. It's up 52 cents on the day. I think it's just a slow grind. But what's really interesting, I'm thinking now with the blockchain, I don't even know how it would work, but I'm thinking, what if, in a way, as you can get mortgages, because certainly in the Northeast is a good example, but I think there are many cities around the country where there are a lot of young people, that young families, they're getting to the age where the spouse, or at least the women of the family, are saying, well, we've held off having a child for quite some time. We've got our careers. We're doing okay. Now I can have a child, or a second child, whatever. It would not, and this is the period where young people in their if they married in the early married years, start to think of home accommodation, and housing is out of reach. So it wouldn't surprise me if new ventures come along, like there's like a fund that is a fund that allows young people to get houses based on other people owning the mortgage, and they have a 30% or a 40%, and if it's ever sold, all the investors get their money first, and then anything over goes to the people who own the house. So it's a way of ameliorating the huge debt of mortgage. I'm just thinking there are going to be a whole new avenues to be able to create. I haven't read this, I'm just guessing, that there are going to be a whole new avenues of funding mortgages so that people can own homes that are just out of their reach, but they are able very easily to pay the monthlies. It's just that big capital that they can't outlay. I'm just thinking out loud, because when you start to get aberrations of the norm, that's when things become vulnerable. And that's where, Paul, that's where I think we're going to see margin debt, interest rates, the whole thing come down. But that's later on. I'm not going to look at it now. I don't think it's effective right now for me to be looking at it. In the big picture, in the smaller term, yeah, these things are very important. So let's get back. So high-grade copper is the only thing I didn't do. High-grade copper right now, holding steady at about 313. So that was a question. It wasn't a question, it was a statement on margin debt. Next thing I've got here is a couple of good questions came last night, but let me just, first of all, I spoke about Boeing. A lot of people asked about Boeing. What about Triple M? So yeah, you remember my Dow quartet? GE, which was the absolute worst of the worst, breaks down and now is holding not too bad. GE, I wouldn't be buying it right now. I'm looking at it. So GE is out of the question. It's terrible. Triple M now has joined us down 3 at 197, having made an all-time high in the 259 area, down at 197. This is serious stuff. IBM also had a collapse. So my Dow quartet is really old-fashioned old quartet. So look at this, gaps down, island reversal, trading at 144, was trading in the 161 area. Not good at all. And UTX now is the stalwart of the whole group, trading down 68 cents, and also had a horrible session yesterday. Peak D in the monthly chart, I have to tell you that every way I look at this, I don't see new highs in the indices until we've completed our consolidation. And that would include Amazon. Look at Amazon right now. Amazon is down 5.85 at 1454. Made a peak E, making a peak E in the monthly chart. There's no new high above 1617.54, the 13th of March all-time high. This is saying even the best of the best is starting to consolidate. Goog was it's up 5 today. Had a spike early on yesterday, and then during the day just collapsed. Now it's at 1,025, had 1177.45 all-time high, and that was back in March, mid-March. peak E in the weekly chart, and a peak E in the monthly chart. So you go D, E, and E in the different time frames. This is telling me that we're going to have to wait. We're going to have to wait before we get anything other than, and I can see it coming at any point. There are certain sectors that are indicating there could be just a sudden spiral to the upside of about 3 days or so. And then I think it's back to the same old thing. The tide has changed as far as I'm concerned for a while now. The tide is going to low tide. They're not going to high tide. I'll be back. Dow's down 50.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. I'm back. I'm just looking at this. It was shown in the den. FINRA, statistics, debt balances, and customer security margin accounts. So it's remained about the same. It's a little higher over the last month. All right, well, I can't, let me just see. January 16. Yeah, it has increased, but I want to see year over year. Yeah, I'm going to have a look at this in greater detail. And it doesn't look outlandish just off the top of my head, but that's not the way to assess any statistic. You need to look at it. So here we go. Question I had was about oh, that's right. I had a caller the other day, CBI. We were talking. Where did it go? CBI, type it into the right place. CBI, Chicago Bridge and Iron, trading right now up $1 at 14.85. Oh my, this is nice. Chicago Bridge and Iron. We were looking at it, and I said, just be a little careful. As I recall, where did I write that down? So that must have been a few days ago. CBI, I wrote it down somewhere. I don't have it right in front of me, but anyway, I do remember the call, and we were looking at. Oh, it wasn't. It was an email, and CBI was Chicago Bridge and Iron. And what I said is just be a little careful. It could be in the right area, but how it holds the left side low, if I remember correctly, this is exactly what I think I would have said. I just can't remember. I remember looking at the numbers, but what I did say was 12.10 was the low, and it mustn't close underneath that, or else this is out of the picture in terms of infrastructure play. However, yesterday it goes to $12.12. $12.12 is 2 cents higher than it was on the 6th of April. And has a nice 2-3 days ago. Yesterday gaps up, holds the gap nicely. Kind of gaps up. And then today does the same thing. And that's really important. So CBI is acting well for the person who called, asked about it. Make sure that it holds 13.60 as support. But right now it's holding quite nicely. Stay tuned. You've got Steve Rhodes, you've got Dave White, you've got Tom O'Brien. What's there Wednesday? Have a great day. I'll be back tomorrow. Check out my opening call. You'll find profitable and beneficial. Be back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.